So today we're going to be talking about the top 6 characteristics of great long-term investments. Now I know I've said this before, but I always recommend that people go long when they invest. Personally, I have a long-term value-oriented investing approach, and I really wanted to kind of simplify the process of finding a good investment. Now don't get me wrong, there's a lot that goes into researching and analyzing companies and deciding on a good investment. So don't think that it's just a simple 6-step process, because every single one of these steps, it may take you many hours to really come up with a good answer to these questions. But I basically took what I knew about investing and my own strategy and tried to simplify it, because oftentimes things are overly complicated. And I came up with these 6 characteristics as the characteristics of great long-term investments, and the main things that I look for when I'm going to invest in a stock. Now before I get into the video, I just wanted to mention to you guys, if you're looking to learn more about investing in the stock market and any of these things mentioned here, I do have my stock market mastery course. It's over 12 hours in length, and it goes into a lot of detail about each of these things here, and it's pretty much everything you guys need to know to get started with investing in the stock market. And you also get access to a private stock market mastery group where you guys can ask me questions and meet other people who are in the same position you are, where you're learning how to invest in the stock market for the first time. Or maybe you're a little more experienced and you're just looking to meet some people doing the same thing that you are doing so you can bounce ideas off each other. But if you guys want to check that out, the first 30 days are just $14, and there is a full refund on that anytime in the first 30 days if you get involved and you realize that it wasn't what you were looking for, or you're just in over your head. I completely understand that. So if it's not something that's helping you, I give people a full refund. But anyways, let's talk about the characteristics of great long-term investments. The number one thing that I look for is a long-term competitive advantage, because oftentimes you will see companies that are coming into favor. They release a new and exciting product, and all of a sudden people start buying that product and they're having great sales and great numbers, and as a result the stock goes sky high. But that is not a long-term competitive advantage. A lot of companies have a very short-lived competitive advantage. People buy their products for 1 or 2 seasons, and next thing you know, something new comes out, or one of the big competitors make the same exact product, and next thing you know, that business is yanked out from under them. So the one thing that I look for above everything else is that long-term competitive advantage, because to tell you the truth, guys, as a long-term investor, I don't really care about the short-term excitement. Now, if I'm trading a stock, and I do trade with a very small portion, about 5% of my portfolio, if I'm trading a stock, then maybe I'll be interested in that short-lived excitement surrounding a product or something. But as a long-term investment, I'm not really caring or worried about that short-term excitement or that short-lived excitement with certain companies. So the one thing you need to look for a long-term investment is to make sure that they not only have a short-term advantage, but a long-term advantage for many years and many decades going forward. And one example of a company with a great long-term competitive advantage is Microsoft. Now, what is the advantage that Microsoft has? The advantage is everyone out there, all the businesses out there are already using Microsoft software. And I talked about this in one of my other videos, what we call the network effect. But when more people are using something, it becomes more valuable because people are familiar with it. And when you go to school, in most cases, the computers you're using are using Windows operating system. So at that point, Microsoft has a huge competitive advantage because everyone uses Windows. So I try to look for companies that have a competitive advantage like that, where they're the industry standard. You'd want to make sure that they have an advantage that's not going away. You want to make sure they've really carved out a good customer base and they have loyal customers. So that's why the one thing you guys need to look for above all else is a long-term competitive advantage and not just some kind of short-lived prospect. Number 2 on my list here is equally important, and that is high barriers to entry. Barriers to entry are things that make it more difficult or easy to go out there and start the same exact business. So you want to make sure that when you're investing in a company, they have high barriers to entry as far as what business or what customer base they are serving. So for an example of a company with high barriers to entry, we have Amazon. I want you guys to think about this right now. How much money would it cost to create your own version of Amazon, to create a fulfillment network and create distribution centers and to set up the website? That would cost you billions of dollars, okay? That is what you want to see with a great investment, is a company that is very difficult to rip off. So why does Amazon have high barriers to entry? Number one, simply due to the size. Amazon is already so large and people associate online shopping with Amazon. In fact, many people, when they're looking to buy a product, they'll actually start their search on Amazon instead of starting on Google because they are so hardwired. Their brain is programmed to associate Amazon with shopping. And I'm one of those people. If I'm going to go out there and buy something, I usually start on Amazon. I don't start on Google. I start right on the Amazon website because I know that's where I buy things. They also have a massive fulfillment network with over 70 Amazon fulfillment centers. So think about the upfront cost associated with building these fulfillment centers. They're multi-million-dollar buildings, and they have over 70 of them. So if you wanted to go out there and do what Amazon is doing and offer 2-day shipping, imagine how many fulfillment centers you would need to have and how many warehouses you would need in order to do that. That is what we call high barriers to entry, and that is something else I look for in a great long-term investment. Now, there are multiple different barriers to entry that you guys should look for, and I go into a lot more detail when we cover fundamental stock analysis in my stock market mastery course. But at some point, I will do a video just on barriers to entry for you guys. That way you guys can get an idea of what things you should be looking for as far as the barriers to entry of a business or a company. Number 3 on my list is something that people don't really talk about when it comes to investing, and it is so important, and that is investing in a company with a strong and recognizable brand. And I have 2 examples for this, number 1 being Coca-Cola and number 2 being Apple. I want you guys to think about those companies right now. Could you think of a brand out there that is more recognizable than Coca-Cola? Or can you think of a company that has more of a cult following than Apple does? I mean, think about that fact that many people will go out there and buy new Apple products just because it's an Apple product. I mean, you're going to see companies like BlackBerry and Samsung releasing phones, and oftentimes people don't buy them because they go, oh, you know, the phone I have still works, or the device I have still works just fine. But when Apple releases a new product, people will line up outside the door to buy it. That is because Apple has a very strong and recognizable brand. And Apple is something that people have associated with status. And this is largely due to the fact that they pay so much attention to detail. I'm getting off onto a bit of a tangent here, but I want you guys to think about when you open up an Apple product and the way that the box slides off in a certain way and how everything looks very polished and clean. What Apple has done is they've built status into their product. So people who buy an Apple product have the idea that it will increase their status, and people will look at them in a different way because they're using the Apple product. That is what Apple has done through their strong and recognizable brand. They really have built something crazy here where it's a company that has a cult following where people will buy it no matter what because they think it will increase their status. So one main reason why you should invest in a company with a strong and recognizable brand is because many people will buy the products just because of the brand, just because of the name. Now, the reason I like Apple is because of the loyal fan base, and I like Coca-Cola because it is such a strong and recognizable brand, and they have fans all over the world. So you go anywhere in the world and you show people a Coca-Cola logo, they're going to know what it is. And this is what you want to look for in a long-term investment, is a strong and recognizable brand. The 4th quality of a great long-term investment is to make sure that this company is an industry leader and not a follower. When it comes to companies out there, there are 2 types of companies. There are the ones that are out there carving the new path, and they're the innovators, and they're coming up with everything, and then there are those that are riding the coattails of those companies. Now, I'm going to pick on AMD for a minute here because I know a lot of people have known that I've invested in AMD. I've been trading in and out of AMD throughout this year, so that's been my speculative play. But AMD is an example of a company that rides the coattails of Intel and Nvidia. They're never quite where they're at. Sometimes they get a little bit ahead, like this year they've had a bit of a competitive advantage, a short-lived competitive advantage. Notice it's not a long-term competitive advantage, but they've had a short-lived competitive advantage, and as a result, they've come into favor. But that is an example of a company that is riding the coattails of the leaders. The leaders of those industries are obviously Nvidia when it comes to GPUs and Intel when it comes to CPUs. So when I'm investing in the long term, I always want to invest in the leaders and not the followers. And the best way for me to figure this out is by looking at the actual products or the goods they are providing. So one example of this is Tesla. Tesla is out there doing things that nobody else is doing. They're creating autonomous vehicles. They're creating the first attractive electric vehicle, and not to mention all of their other endeavors. But what I'm getting at here is that Tesla is doing things that nobody else is doing, making them innovative and making them the industry leader. And Nvidia's on my list here as well because they are making investments in things like artificial intelligence and virtual reality and things of that nature that most likely are the future. So that's what you want to see with a great long-term investment, is to make sure this company is a leader and they're the ones that are innovating and figuring out what's going to be the big thing in the next 5 or 10 years. You don't want to be investing long-term in the companies that are just riding the coattails of these leaders. The fifth characteristic of a great long-term investment is to invest in a company with a strong balance sheet. This is very important, guys, because you have to remember that the balance sheet is going to show you what the debt load is of the company, what kind of assets they have. And this is going to give you a good snapshot of the financial health of the company. And you always want to invest in a company with good financial health. Now, there are so many different things you guys should be looking at when it comes to that balance sheet, so I'm not going to get into details with this video. Down the road, I might do a video solely on analyzing a balance sheet, but again, I have all of that in my Stock Market Mastery course where I cover the analysis of the 3 core financial documents of a company. But what you want to look for is you want to look for a company that has enough cash, that doesn't have a lot of debt. You don't want to invest in a company that is burdened with debt. And you want to make sure that a company that has debt has the ability to pay it off. So my best example of a company with a great balance sheet is Google. Google has one of the best balance sheets out there, and that is the main reason why Google is a part of my stock portfolio. Currently, Google has over $25 billion in free cash flow. They're not burdened with debt at all. They have a cash surplus. They're sitting on billions of dollars in cash. And that can be put towards research. It can be put towards company acquisitions and so many things. You want to make sure that when you're making an investment in a company, this is a financially healthy company. And Google is the perfect example of what you should look for in terms of a balance sheet. And you want to make sure that the company has enough cash to pay off its debt, or better yet, a company like Google is what you call a cash cow, where they are sitting on plenty of cash. That is a very financially healthy company. Trust me, guys, there's a lot of investments out there. There's a lot of companies out there that I would love to invest in, but I just can't do it because of the balance sheet, because they have too much debt. It is a big thing when it comes to investing, and it can be a make or break when it comes to your investment. You could find a company that meets all these other characteristics here, 5 of the 6, but they're burdened with debt, and it can ruin the whole investment because it just doesn't make financial sense to invest in a company that is loaded with debt. And number 6 on my list here, the final characteristic of a great long-term investment is a company that has a consistent operating history. What I mean by that is invest in companies that have been around for a long time. They've been around for decades, if not centuries. Those are my favorite types of investments because these are companies that have weathered all storms. If a company has been around for a century, they've seen the best of times and they've seen the worst of times, and they've powered through it. Many of these new companies that are emerging now have never even been through a bear market. So that is why something very important when it comes to investing is to make sure that this is a company that has a consistent operating history. They've been around for many decades. People invest in these newly formed companies that go public, and they don't realize that these companies have no operating history. So for me, when I'm looking at a long-term investment, consistent operating history is very important. And if I'm looking at a stock that pays a dividend, and typically for me when I'm looking at a long-term investment, I'm typically looking at an income investment or a stock that pays dividends. What I look at is, number 1, how long has that company been around? Number 2, how long have they been paying dividends? Number 3, have the dividends ever been interrupted? And number 4, what is the dividend growth streak, which is how long or how many years they've been growing that dividend. I want to make sure that they're offering a dividend to shareholders and they're not interrupting it. I want to make sure that dividend is growing, and I want to make sure this company is time tested, because a lot of companies out there are not time tested. Even though they seem like great investments, they haven't been through the bad times that companies will see. So my example of a company with a consistent operating history is ExxonMobil, the oil company. This is a company that has a consistent operating history, a consistent dividend, and a great dividend growth streak, all the things I look for in a long-term income investment. So ExxonMobil was founded in 1870. Now at one point, these were two companies that joined together, but the parent company or the original company was formed back in 1870. So looking at that detail right there, they have almost 150 years of operating history. That is something I like to see in a long-term investment. Second of all, how long has this company been paying dividends? Well, ExxonMobil started paying dividends back in the year 1882. So they've been paying dividends for well over 130 years. And finally, what is that dividend growth streak? Well, ExxonMobil is on a 35-year dividend growth streak. So for the last 35 years straight, they've been growing that dividend. That is what I call consistent operating history. Anyways, guys, that's all I got for this video. These are my top 6 characteristics of long-term investments. Make sure you guys let me know what you think in the comments section below. If you guys enjoyed this video, please drop a like. If you are new to my channel, please consider subscribing to be notified of future uploads. And as always, I thank you for taking the time to watch this video.